Again, good afternoon, and welcome to this evening's video, Simpler Stocks. This is Neil sitting in for Chris again. He's on vacation. I'm not sure how Chris does these end of the weeks, but I'll tell you what I've got in mind, and that is to do kind of a end of the week wrap-up / let's look forward to what to look forward to and how for next week. How about that? So in kind of giving you that, I'll tell you where we are, where we've been, which is historically significance. There is significance, I believe, in that we've traded now consecutively sideways inside of a 1% range for some period of time now, 11, 12 days, that we haven't done in decades. You won't find a period of low volatility like that for that extensive of a period of time for some time now. What does that do? What does that exactly do to you? Well, there's different strokes for different folks, right? That means that there's some that are sitting in front of their computers and trying to justify, every hour or every day their being there. In other words, I need to make X number of dollars an hour or X number of dollars a day in order to justify my sitting in front of this computer. If you're doing that, you might be chasing the market. If you're chasing the market, you're probably not doing yourself any real favors because the market's been doing this sideways kind of thing, moreover. Now, of course, we do have the individual equity performance on some earnings that far outpaces the overall sideways trades that we're seeing right here, namely Apple, Facebook, Amazon, that kind of stuff. Gilead broke down. The General Dynamics, Northrop has the defense sector up kind of nicely if you look at Raytheon, that sort of stuff. Outside of that, who's winning here? Well, the folks that are selling the condors, selling premium, both high and low, settling in the middle. But what I'm trying to say kind of nicely is, one, if you're not doing real well in some real sideways trade like this, then don't beat yourself up too much, honestly. There are some that are going to do well in this, but they're really, moreover, I think the folks that are on the earnings that know how to do that. By the way, John was just teaching an earnings class over at Simpler Options. And then, two, the folks that are selling premium outside the edges and just sort of letting everything settle, right in the middle. Just don't get too wound up in, this is really, I'm trying to help. Don't get too wound up in trying to justify your hourly or daily, rate and end up chasing the market as a result, especially in something that's as sideways as this. Okay, so where have we been? We've been sideways now for an extensive period of time, and where are we looking to go from here? Well, typically when you coil like that for that extensive a period of time, we're building up energy, and it results in something like that or that. I mean, kind of a nice move once we can break out of the edges of this. I'll tell you this, I really don't have much choice at this time but to sort of err to the side of those that have been winning for years now. By the way, if you go all the way back to, since about 2009, who's been winning. And every time this market breaks, it typically, the break is bought, and we just trade higher and higher and higher. We just made new all-time highs again today. So who do you think is in control? Let's err to the side of that. Okay, so when we now are going to stop here and go to the trade tab and look at what we're looking at in terms of an expected move, or that what's priced in for next week, we're looking at, we're looking to the tune of basically 20 points, 20 S&P points, basically, right? I mean, let's split the difference, 20, 25 points. That's not going to be perfect, but it's generally close. So that being the case, you look over here and you say, okay, well then 20, 25 points higher or lower. Answer, of course, yes, either. Erring to the side of that who's been in control, I look to the first of the month and the new money that comes in first of the month with money managers who get that influx of cash that they have to put to work. Trust me, I know some of them, talk to them and work with them and know what they're up against right now, and they're getting calls from clients who are wanting to be, trust me, fully vested in a market that is banging on new all-time highs as recently as today. And so with that, they're going to go to work Monday, Tuesday of next week. Typically, that's the first couple of days of the new month, and we're going to see, some of that money put to work. My anticipation is that they're going to want to own more of what they've already got in the names like the Facebook, the Amazon and stuff, Priceline, Google, all that stuff that's the top performers that's breaking out nicely on earnings. And those who don't, shame on them first, but those who don't, we're going to want to pick some of that up so that it's on their statements, because they're not going to want to send out statements that don't have the names that are the top performers, right, on their statements. So we're going to look for some of that. Of course, be mindful of that which, we've got anything with earnings next week. Be mindful of some of that. I am in buy the dips mode, okay? You find where the money is going and you get in buy the dips mode. Look at some of the tickers that, look at some of this stuff, American Water. Ooh, don't make me. My computer, by the way, has been really slow today, but let's look at some of this stuff, right? I mean, we got earnings, 8-4, so the fourth. And this is a chart that you don't really babysit. It's lower left to upper right. Retracements into the averages are bought, and up she goes. And it pays nicely, too. Let's go look. What does she pay? 2%. It's not really that good. A lot of the American Waters and Electrics and Southerns and that guy, all the energy stuff, they pay pretty decent dividends anyway, average about, 3%. But while it's doing that, it's trending lower left to upper right. It doesn't require a lot of babysitting. So, some of that, Criteo, something I haven't looked at in a while. We've got earnings coming up. We got a squeeze, a little buy signal. We've got trending, that's lower left to upper right. Not as pretty as that first chart I showed you, but this is one that I've liked for a long time. And I'd give it about, $48 or so, something like that. Target, that's $4 on, it's almost 10%, call it 8%, so something like that. That'd be a upside target there. Another one that came to my attention today is Hormel. Now, Hormel needed a little break since this 2-for-1 split back here in February. All right, wasn't real happy about that. It's kind of like the Nike split. Didn't quite get it. Wasn't happy about it, but it is what it is. And from there, you can see what happened. Topped out, corrected a bit, but guess what? We're now starting to right the averages. Price action on top of the averages stacked. We're getting something here. Now we're getting somewhere. For this thing, I mean, I'm looking at $40+ up here as target. Now, first challenge, of course, going to be $40, I would imagine, on that little pivot before the last drop. So 40, and then after that, about $43 in terms of targets. But that's not bad. From if you can pick it up around 37, you're talking about 10% return. So these are a couple of the ideas. I've got a bunch more that I'm going to go into in the premium video, which I'm about to do next. But there's a couple for you. And also a recap of this week, which was decent week. It was challenging. It was sideways, but we made new all-time highs again, and it's tough to be short that. And I would ask you a question: what's so bearish about new all-time highs? So when you go into next week trying to figure out long, short, or out, ask yourself, what's so bearish about new all-time highs? All right. Hope this helps. You guys have a good trade. Nice evening. Good weekend. Get some rest. We'll do it again first of next week, where Chris will be back to then take over again the videos. Good night.